friends, this is the Cryptonian taking a look at Bitcoin. However, this is a different chart. This is the weekly chart, and I wanted to show something to you on the weekly chart. And this is more of a long-term macro view on the Bitcoin cycles, right? However, we're not going to get into the Bitcoin cycle so much. We're going to get into some signals that the Cryptonian suite is giving. They're basically B2 signals, and these are trend reversal signals. And so basically, when you take a look at the entire history, okay, you can see pi cycle tops and pi cycle bottoms, right? And so we're using the pi cycle top and bottom indicators. These indicators are pretty accurate, more or less, right? So no need to reinvent anything there. However, there is a 30 moving average and a 50 moving average on the Kryptonian suite that I wanted to uh, take a larger bird's eye view of the market. So when taking a look at the weekly, we can see the B2 occurred here. Okay, this is the B2 signal, and then again, this is back in the 2012 time when Bitcoin was, goodness gracious, Bitcoin was $6, right? So here's the thing. Here's the thing about Bitcoin. Um, Bitcoin doesn't have a lot of history. Bitcoin, um, you know, has limited data that we can actually take a look at. This is the Bitstamp chart, by the way, and so there's not a lot of information here that we can ascertain historical, price movements, etc., um, and infer future price action or behavior. It's just not. It's just not. There's not too much history here. It's a young asset when you think about, assets in general. Gold, you know, been around for thousands of years. Data, no, we don't have thousands of years of data, but we have 100 years of data for gold. So that's much different than Bitcoin. So keep that in mind. So anyway, we have a signal here, a B2 signal, and then the price went up into a nice uptrend. We're above the 50, which is this orange line, and we're above the 30, which is a thin yellow line. That's the bottom of the cloud, right? And so from that point, we went up. Let's see here. Um, from that point, it looks like we hit 24,200. Let's move that up here. 24,245 percent gains, right? And then we actually had a very bullish situation. We hit a pi cycle top, and then we had a very, very short-lived downtrend, and then we had a pi cycle top again. Now, of course, this downtrend here, this lull, was many months, and so it seems like it's small, short pullback on the chart, but this was a better part of, let's see, this is almost, yeah, so April to November. Yeah, I mean this was several months, so it doesn't seem that long unless you're waiting during this time period, right? So anyway, and then we had the pi cycle top, and then we dipped about here. It says 52%, right? We came down, we saw a bottom, and that bottom was 52% loss or correction from there, right? And then at that time, excuse me, and then at that time we had another signal, right? We had another B2 signal here. And then again, that signal put us up above the 50, the orange line, put us up above the 50 and actually up above the 30 into the green cloud again, right? So this is a change in trend, noticeable change in trend, quantifiable change in trend, and then we just rocketed up from there. We had a small dip here. We had a real small dip, 19%. Now 19% doesn't sound like a lot. It's that's a healthy dip, right? But that's almost nothing compared to the entire trend here. So when we take a look at the entire trend, price stayed up above that 30 moving average, okay? And actually price actually came down below it a few times, and whenever it went below the 30 and the right close or onto the 50, that was a perfect buying opportunity, right? We see that here because of a lot of volatility. We see that here, okay? And so whenever it hits that gap between the 30 and 50, that is a great buy. That's in an uptrend when the cloud is green, right? Okay, then we had the pi cycle top up here, and then we came down and had um, a a dip of 78%. Not really a dip, we had a bear market, 78%, and then we hit the pi cycle bottom again, right? Right here, pi cycle bottom, and then here's uh, our B2 signal, right? And then that starts the trend again. Now this was a little bit different, and this is because of 2019, 2020. This was a rough period of time where we had the pandemic, right? So that being said, a lot of volatility here around the 50 and even by the 200. We came down to the 200, and that was a signal that things were going to get kind of rough, right? So 47% down, not bad in historical terms. Historical terms, we've seen 78% down, right? And then, of course, we had a B2 signal, but because of the pandemic and all that, we went right back down under the 200, and that's where a lot of people panicked, and we had a capitulation. We went down to 3,900, and then we had a B2 signal. We recovered pretty quickly. This is called a V recovery, boom, like a V, and like a check mark, and then we had a B2 signal. Now we had an early signal. It's called an impulse signal. This green triangle here, right? And so anyway, we had another B2. We went up into this bull trend, bull run, bull market, right? And then of course we had another pi cycle top. Okay, this shows you exactly where you would sell. And then, excuse me, and then we came down here and had another B2 signal here. That was this was that double top that we had just recently, right? And I say just recently because as far as this long-term cycle goes, right? So this is when we had that double top. Everybody said we're going to 100,000. We didn't go to 100,000. We barely broke the top, and big players sold there. FTX. This is during FTX's manipulation period. They were manipulating. Come to find out, they were manipulating this here, and and then finally we came back down again from there. From there, we saw a 71% correction, and then we had a pi cycle bottom here again. Now, the pi cycle bottom here was not as accurate as previous pi cycle bottoms, but it was pretty close. I mean, look at this. In the large picture, it was pretty close. So still a very good signal. Which brings us here now to where we are today. Here we are here today at this point. We already had the pi cycle bottom. And look at here, we already had our B2 signal, right? and now we're in this green cloud, right? And we just had another impulse signal to the upside, right? So, you know, it looks like the bottom is in. It looks like this cycle is just getting started. Now, could we have a pullback? Sure. Um, there are not very many long-term cycles um, to to take a look at, and significant large dips after the signal are not historically um, you know common. We only have, but then again, we have limited data, right? So let's see. Here's our bottom, and we went to the top. So here is the pandemic area, and that's the only reason why we had such a volatility reaction here, right? That's the only reason why we came down and hit the 200. I think if there's no pandemic, we would have went sideways like this, never coming down to that extreme low, and we would have went right up into that next cycle, right? So I think that is an anomaly. So when you take a look at this very small dip, right? Here's your B2, we went up, and we just had a sideways period, right? A little bit of a dip. Let's take a look and see how much of a dip that was from here to here. About 20%, right? About 20%. So not really that big, right? And then we still went up and preserved the bull run. So what's my point? My point is here. Well, actually, first of all, let's go back here. Excuse me, and take a look at this B2 signal. We didn't see a significant. Actually, we saw a small one here, a small correction here that was 29%. Okay, so we have a correction after our B2 signal of 29% correction. And then we had this one, which was 20%, 17%. Okay. And this, it doesn't break trend. It doesn't break trend. And then this was the significant one because of the pandemic. And that was 52%. Very atypical, though. And that was it. And then now we're here. So there's two times where the trend was not affected by that pullback, not in a significant way. 20% pullback. And look at this. We've already had a pullback here. Okay, that was a 15. If you go to the bottom of that wick, that's a 19.43% pullback. So there's more of a, statistically speaking, there's more of a likelihood that we will go up from here than go down on a large macro weekly basis, right? We could have some brief volatility here, and then go up, um, but statistically speaking, we should not have a large pullback. We should not have a large dump or a large correction, right? So, risk reward when taking a look at historical, and I know that historical references. Look, history's history. Times change, markets change, macroeconomics changes, and so historical data. It's nice to take a look at that and see the behaviors around moving averages and certain cycles, but it is no guarantee. There is no guarantee in financial markets, right, with these assets, especially with Bitcoin, highly volatile, and you have some really big players coming into the market. Big players typically manipulate markets, right? So taking a look at where we're at now, we could have a small pullback like this or consolidation before pushing higher. But statistically speaking, we have a 66% chance of staying above the 50 moving average, which is 26,900, probably around 27,000, right? And and then here we have the 200, which is not far behind, 25,600, right? So if we had any type of meaningful pullback here, statistically speaking, that would be opportunity for a buy, right? As long as the trend is not broken. Now, if we come down here and start bumping our head on the 50 and then lose the 200 and start coming down, then you'd want to see that the bottom of that correction before you got in. But in my opinion, again, this is not investment advice. I cannot give you investment advice, right? So I'm just letting you know that from a weekly chart perspective and statistical perspective, basics, right? Nothing heavy. This is really not a bad place to enter, right? I would say some capital, not a tremendous amount of capital, because we did go up about 40 or about 86% here. Um, but any pullback like to the 28 fit to the fib of 28,154, that could be a purchase. The 50, that could be a purchase, 26,700. So, you know, the way to scale in would be, if you're not sure if it's going up from here or pulling back, there may not be a major pullback, right? We may just go sideways. So deploying some capital here, a certain percentage, and then if we come down, have a correction, deploy more capital. Ideally, here's a system that I've seen work very well, and it because it uses the law of averages, right? So what you would do is you'd take this entire range, right, from here to here, and what you would do is actually what this is what I would do, right? I would take this range, put it up here, and then this is the fib range, right? The fib range from the bottom to where we are now. And what I would do is I would mark off lines at where each and every fib is, right? So this fib, let's take a look here. So what I would do is take a look at this right here. So I would put a fib here, a fib line here, and that would be a purchase point. I'd put a fib line here, that would be a purchase point with an order. I'd put a fib here, that would be a purchase point with an order, and here, and here, and even here, right? And what I would do, and I've used this strategy, before. Excuse me, with investing, and basically it's just dollar cost averaging in, right? So at each line, you make a purchase, but the line below the one above, or should I say, every line that you reach, you double your investment. And that gets you very close in average terms. You position your average, you average down to very close to where the current price is, right? So, for example, if you enter in here, okay, with $100, you're going to enter in at this fib line here, the first line, with $200, right? So if you look at where this line is here and this line, the middle point is right about here. But you're doubling your investment. So you split the difference between that again, and it puts you right here. So you're very close to the current price, right? So then if there is a push higher, you're in the money quickly, right? You're in the money. So every line, you double your investment that you purchased prior. So again, $100 investment now. Okay, this is just an example. If it drops down to the first line, that's a $200 investment additional. Okay, and then if it drops again to the next line, it's a $400 investment. And then if it drops again to the next line, keeps going, that's an $800 investment. And then the next line is a $1,600 investment, right? The next line is a $3,200 investment. And then, of course, the very last line would be 64. And the reason for that is the farther you come down, the larger of your investment, because the more likelihood of the price reversing and going higher. Okay? And the law of averages states that if you keep your if you keep your investment the same, like from this line to this line, if you keep the investment the same, your average is in the middle. But if you double it, then you split that distance again and your average is down here. So you get very close to the bottom. So if there is just a weak pump to the upside, you're in the money already. You're in profit, right? So that's the way that I look at the market. That's the way that I look at, um, you know, averaging in, um, averaging on averaging in on pullbacks. And this is a long-term strategy, right? So if you're in here, you're you're ensuring, if you make an investment now, a small investment, you're ensuring that you're in the market in case everything explodes higher, right? And then, excuse me, and then if there's a pullback, you start doubling up your investments, and then you're scaling down, averaging down. By the way, that's what Michael Saylor has done. He's doing this with billions of dollars. That's what these fund managers do. When you have a large amount of money, you have to scale in. You have to average in. You can't make large purchases of millions and billions of dollars all at once. You can't do that. You'll move the price. You will go against your own goal of getting the best price if you use too much money, right? So that's what I want you to be aware of, right? So large asset managers scale in, right? And that is the best way. Mathematics and science says that scaling in, um, what's called DCA or dollar cost averaging, is the best way. Not only that, but if you add what I'm telling you to it by doubling it, you're not only dollar cost averaging, but you're doubling at every point down. And it doesn't have to be on the fibs. I'm just using fibs because these are very time tested areas where we reverse at, where we find reversals at, right? So, like for example, down here, this is the golden pocket. A large portion of pullbacks come down to this area. This is a very common pullback area. And if that happens, you will have purchased once, twice, three times, three to four times, depending on where it hits, right? And then you're in. And then when it starts moving back up, then you can put the rest in if you feel confident, if you can afford it. Again, never invest uh, anything more than you're comfortable or willing to lose. Don't don't sell the house, don't sell the car, don't I wouldn't do that. But um, this is what I feel is most likely the best investment strategy. Now, this is a long-term strategy, and this is assuming that the plan is to hold until the next pi cycle top, right? So, you know, so for example, if you took this signal, let's just say you took this signal here, right? Let's take a look at this. All right, so the market gave you a signal here, a B2 signal here. You're above the 50, you took that, and then suddenly the market just drops because of a black swan event, right? So you would have been scaling in this area, right? And even though it went below the 200, when it rebounded, you would have been in profit, and then when it actually went into the strong bull run up, you would have been in massive profit. I mean, again, that bull run was 572%. So $100 would have turned into almost $600 if you would have sold the top at the pi cycle top. 1,000 would have turned into almost 6,000 if you would have sold the top, right? 10,000 would have turned into almost 60,000 if you would have sold the top. So that's the power of the market, right? And that's the power of cycles. So, the bottom line is we're at a juncture where could we go down? Could we have a pullback? Yeah, sure. It's as high, it's possible, but the bottom line is a small pullback probably is highly likely. It's not guaranteed, but over time, if you look at the big picture, even if we have a small pullback, the trend from here on out is going to be largely up, especially if your time horizon is 2 years, a year, 2 years, something like that out. So there you have it, friends. I just wanted to share this with you. And yeah, so we'll go ahead and take away the pi cycle indicators. And since I have, excuse me, the chart open here, let me go ahead and well, okay, I guess that'll be it. I don't want to make the video too long. Let's go ahead and get this video up on the channel, and then I'll discuss other things in its due time, right? So yeah, we'll go from there. Thanks, friends. Take care. I hope this kind of gives you some perspective as to where this cycle is, as to where you are in the grand scheme of things, where we could be going as far as much higher. This right here seems like a lot, and 86% is a decent pump, right? It's a decent beginning, but again, this is only considering historical price action and cycles. This is only the beginning. This is nothing. From your entry point, from your entry signal here, you only are up 9%, 9.4%, right? Historically, the last cycle gave 500 and some percent. So entering here on, entering now and then subsequent averaging in, doubling up your investments on some kind of a pullback or correction. If we kind of do this, some kind of a dip, then when the market does pull out of that dip and resumes and goes into the full-blown bull market next year, it's going to be real profitable. So thanks, friends. Take care. Please give this video a like. It helps others find this content as you have found, and I hope it's been useful for you. Again, not investment advice. It's educational and entertainment purposes only. And please also subscribe. Consider subscribing to the channel. Thank you.